if I was doing a pitch to you as prospective clients, I would take you through our investment philosophy, and I'm going to spend a minute on that. Obviously try and convince you of the quality of our people and our business practices. But let me just quickly touch on the investment philosophy, and then we'll talk more broadly about investing. We've dubbed ourselves the Undex Funds, and we did that because our philosophy is really anti-benchmark. We have the managers that run our funds, particularly I'll talk about our 3 equity funds, get in the morning, and to use my example earlier, they don't put the index up on their screen or what their competitors are doing. They dig in and they're trying to find undervalued securities. And they are wired that way. It took me a while to find firms that were wired that way. So we absolutely want to beat the benchmark. We think one of our toughest, maybe our toughest competitor is a very basic low-cost ETF. It's a good product. I've used it. I don't have any right now because I do believe in active management, but they are our toughest competitor. And so to beat that index in the long term, and I'd love to have some discussion around this, I think you've got to ignore it in the short term. And certainly that is a key tenet of our philosophy. My partner Scott Ronalds coined the phrase, concentrate damn it, and really the second tenet of our philosophy is that we run very concentrated portfolios. So we don't have 200 stocks in our global portfolio, equity portfolio, which is very typical of a global portfolio. We have between 30 and 40. Our small cap equity fund, wonderful manager out of Montreal, Will Witherich, currently owns 15, maybe it's 16 stocks. It's unheard of in the fund business. But what we're trying to do is get back to what many of you try to do in your portfolio. You don't own 200 stocks in your portfolio. I don't know what you own. You might own 8, you might own 5, you might own 15. We're trying to get back to almost having our funds reflect what Will's and our other managers' personal portfolio would look like. Where do they have the highest conviction? And if they don't believe in oil and gas, don't be underweight oil and gas, don't own it. And so it's very much the philosophy. The third, being a prairie boy originally from Winnipeg, I like the prairie scene really to depict that we've tried to make our managers as unconstrained as possible. Now we are running a highly regulated public mutual fund company, but or mutual funds I should say, but we don't put handcuffs on our managers and say you've got to be value, you've got to be growth, you've got to be large, you've got to be small. Clearly they all have different mandates to run, but we let them go where they're going to find value. So if our global manager, Edinburgh Partners out of Scotland, sees a really good, high-yielding, sort of slow growth situation that's cheap, I'm all over it. Buy Belgacom or Deutsche Telekom or some of these things that they've owned over the last couple of years. But they might also own, and they did very successfully, Baidu.com, you know, or things like that. So it's sort of the third tenet of our philosophy. The fourth I won't touch on is just low turnover. It's not, we don't have rules around it. We just think if you're non-benchmark, if you're concentrated, you're likely to be low turnover, which is more tax efficient, more cost efficient, even given where commissions are these days. It's still more, the less you trade, the more efficient you'll be. So I'm not going to dwell into it. If I was talking to you as prospective clients, we drill into all of our funds, but we implement that philosophy. And it's different than most wealth management companies. We have a definite philosophy, as you as investors should. We'll talk about that. Through 5 funds, 3 equity, a sort of a hybrid income fund, and then a money market fund. Now, I thought in preparing, we thought maybe you might want to know when I went looking for managers for our funds, because we don't, I had to make a decision. Do I build a business like James is doing, or do I manage a fund, which I love to do. That's why I'm in this business. And I really went looking for managers that could bring us global, small cap, income, etc. And here's basically my Excel spreadsheet. And some of it will be pretty corny, but it's the facts. Didn't want, I'm an MBA from Western. I didn't want somebody 2 years out of MBA school running one of our portfolios. I wanted people that had been beaten up, gone through bad markets, bad performance phases, and come out the other side, knew who they were, knew what they stood for, and of course ultimately had had a long record of success. Because the reality in your portfolio, if you're not a professional and you're an amateur, get used to the fact that you're going to go through some periods where just nothing's working. And that's where really the guts and this discipline and the patience you're going to be tested on all those fronts. And so I wanted somebody that married those two. This is very important if you're looking for a manager. It's obviously not relevant to you as an individual investor, but I wanted, it could be a big firm, small firm, but I wanted a sustainable business structure. I wanted somebody, Will Withard, sitting in Montreal. He happens to run a shop with one other person and kind of a network of people around him, owns the whole thing, totally committed to this thing, has all his money in the portfolio. That was a structure I liked because I knew he wasn't going anywhere. We have Connor Clark and Lunn here in town managing our income fund, lots of equity ownership. The senior people all have a big stake in the company and the portfolio. So this was really important because, you know, one of the things I didn't like about that fat and flabby industry, it's a revolving door. You've got people coming and going, and you've got somebody managing your fund one day and gone the next. Right-sized. Totally missed in our industry. Bill Holland, who runs CI, keeps saying, I've got to be like a bank. I've got to be like a bank. I want to be just like as big as the banks. Guess what? In investing, the bigger you are, the tougher it is. And the returns, it's been proven, go down. So no, you don't have that as issue. But just that was very important to me, that we find people that if they've got a sandbox where they're really good in, that they've got the room to play in that sandbox and do whatever they want to do. And finally, it's maybe a little corny, but after 27 years in the business, looking across the table at investors, I wanted passion. There's a lot of technocrats in our industry. They're hugely smart people, but they're going through the motions. They don't have it here. They don't go to the fifth tee thinking about that stock that's gone down today and what are we going to do about it or whatever. They go to the fifth tee thinking about where am I going to hit my drive. Nothing wrong with that, by the way. But we wanted this. So you know, that's you're mostly individual investors, so we won't talk about how you find that in the fund world, other than maybe to give you a little flavor for as you think about yourself as investors. The name Steadyhand, I'll just finish, really just, it was picked purposely as much as we want good managers, low fees, going to do all this great stuff for you. We want to provide a steady hand, and that's kind of what we're going to talk about here in the next few minutes. So let me, this is very dangerous as an investor. I'm going to kind of address it in a minute, but to say you absolutely know something for sure. But after 27 years, sell side, buy side, 3 firms, what do I absolutely know for sure? Well, I'll take you through. I had 9 or 11, and my wife told me I could only have 5. So those of you that are presenters, you know, you can't go past 5. But, so I've got 5. Number 1, it's not different this time. And what I'm referring to is cycles. There's too often we confuse cyclical trends, the ups and downs, supply and demand, whatever industry it might be, with secular trends.